If you think confirmed institutional order blocks are awesome and are a great addition to your trading, then you need to watch this video to the very end, because you will learn about the Grandmaster and King of Order Blocks, which is the institutional control block. Where regular order blocks have millions sitting in them, the institutional control block have hundreds of billions of dollars sitting in it, which makes it extremely important to large funds traders and institutional traders. In this video, we will take a look at the institutional control block. We will cover what they are, how to identify and mark them on the chart, and how to use it in your trading the same way the institutional traders use it. So without any further ado, let's get it started. Welcome back to Tom's Capital, where we analyze the market with facts and figures which enable us to see the market with the eyes of an institutional trader. In our previous video, we discussed order blocks in detail. This is a follow-up to that video. As you already know, order blocks are price zones where the big market players open large positions. These orders are very tiny compared to the orders sitting in an institutional control block. The biggest players in the currency market plays in the futures market, because that is the real market for the asset. The forex we trade is CFD, and it is a copy of currencies in the futures market. And like I explained in our previous videos, the futures market is traded in contracts, and that I have divided these contracts into two classes, which are the retail contracts and the wholesale contracts. The control block is the order block of the wholesale contracts, that is the quarterly contracts and the monthly contracts. These contracts have specific opening period where all big institutional positions are opened. These positions run into billions of dollars. The price range in which these positions are opened is the control block for that contract. The opening period for every monthly and quarterly contract is available on the CME website, and like we all know, the CME is the largest futures exchange. So let's go to their website. The website is cmegroup.com. So what you want to do is you go to markets and select Euro FX right here. After that, you come to these tabs right here and select calendar. Immediately you select calendar, you are going to see the dates. So what you are looking for is the first and last position and the first delivery. So you check the date for first position and first delivery. So the period between these two dates is when the contract is opened. And like you can see here, we have 13th of January and here we have 15th of January. That means 13th to 14th of January is when the contract is opened, and by 15th the delivery begins. So let's check the calendar to confirm that this is Monday, Tuesday of every month. So let's go back to CME. For January, we have 13th and 14th of January, because delivery will start on the 15th. So 13, 14 is when the contract will be opened. So let's check that. You can see it right here. 13, 14 is Monday, Tuesday contract. And like I explained in our forex calendar video, that for currencies, the open is always the Monday, Tuesday before the third Wednesday of the month. And like you can see right here in January, the third Wednesday of the month is this 15th of January, and 13th and 14th is when the contract is opened and the delivery starts on the 15th. So let's check for February. Right here is February. You can see February 14th is when the first position will be opened and the delivery will start on the 19th. So let's check that. For February 14th is when the first position will be opened. That means 17th and 18th is when the contract will be fully opened. So the opening will be this Monday, Tuesday. The opening starts midday on Friday. That is why the 14th of February is included. The real date is 17th and 18th, so that the delivery will start on 19th. For March, you can see right here that it is 17th and the first delivery will start on 19th. That means 17th and 18th of March is when the contract will be opened. So right here, this is March 2025, and 17th and 18th is when the contract will be opened, and on the 19th the delivery will start. And as you can see that 19th when the delivery will start is the third Wednesday of the month of March. Now that we have established the opening period of the monthly contracts, let's jump back on the chart and mark up the opening period and the resulting control block for the contract. As you can see, I have marked up the opening period of the monthly and quarterly contracts. I marked it up to December quarterly contract of 2023. So December of 2023 is where I started marking from, so that we can at least have 4 different quarterly contracts. So this will be our first quarterly contract, second quarterly contract, the third quarterly contract, and the final quarterly contract. This is the current quarterly contract that we are in. So let's go to the beginning and start marking up the control blocks. 18th and 19th of December 2023 was when the quarterly contract was opened. To mark the control block for this quarter, we mark this range, which is the highest point within the opening period and the lowest point. So that's the high and low of that opening period. So this is the quarterly control block for this quarter. I'm going to change the color to red so that we know it is a quarterly control block, and that control block is going to be active till the next quarter is opened. So the next one will be the monthly right here. So let's go ahead and mark that, the high to the low, and I'll change the color to blue. So that is how to mark the control block. I will go ahead and mark the rest till the current contract we are in to save time. So this is it. I'm done marking all the control blocks for the periods I've marked. As you can see right here, the red ones are the quarterly control blocks and the blue ones are the monthly control blocks. So right now, let's go to the beginning and start analyzing how these control blocks can help you to determine what is going on in the market in addition to the others. The first thing I want you to know is that inside the control block is where the biggest players of the market sit. They don't trade much outside the control block, but inside the control block is where most of the liquidity is, and that is where the biggest players play, because they know they can get filled. Any amount of position they want to open will be available inside the control block. So that is where the institutional players are. The next thing I want you to know is that the quarterly players are bigger than the monthly players. The position they are opening is expected to last for 3 months, whereas for the monthly players, the position they are putting in is expected to last for just 1 month. So let's start with the analysis. As you can see right here, this is the first quarter. Inside this quarter, we have monthly players in addition to quarterly players. So that's another reason why the volume there is more. When price breaks out of a control block, it confirms the positioning of the institutional trader inside that control block. Like in this case, we had a bullish breakout, which confirmed to us that the institutional players inside this block are bullish. That is not how we know the direction of the market. The direction is gotten using the fundamentals data from the previous month. That is what we determine how the institutional traders inside the block will position themselves. So in this case, the bias fundamentally is bullish. That is why they position for buy. And like you already know, when the institutions buy at the open of a quarterly contract, their target is the high of the previous quarterly contract. And also when they sell at the open of a quarterly contract, the target is the low of the previous quarterly contract. In this case, the fundamental bias is bullish, so the institutional traders position for buys. That is why this breakout happened in the bullish direction. So the target is the high of the previous quarter, which is this high right here. After that target was taken, we will have a repricing. During repricing, price will go to the heavy pending orders that are in the previous half of the previous monthly contract. So in this case, if we are going to have any pending orders, it's definitely going to be below this quarterly control block. And we already know that the institutional players inside this control block are bullish. So we know that most likely the bullish players will not want their position to go into loss, so they will defend it inside this control block. So as you can see, when price came in to the control block, they stopped it from going down so that they will not go into loss. So they are taking profit or flipping their position right here. How we know that is through the orders that come into the market. The heavy orders show us what the big players are doing. In this case, we are going to see that they are not putting in heavy buys but are putting in heavy sell, which means they are flipping their position inside the block. So that's why we add this range where price just stayed in the control block for them to completely flip all their buy positions to sell. And after that, we entered another monthly contract. So inside this monthly contract is when most of the people here will open their new position for sell, and that is exactly what they did. The fundamental for this new monthly contract was bearish, which means they are supposed to position for sell, and that's exactly why these people right here flipped their position from buy to sell. And the target for that sell is this low right here, which was taken within the opening of the monthly contract. And just like they did here, we know that after the target has been reached, the next thing is repricing. And to reprice, we expect price to go to the pending heavy order from the previous contract, which will most likely be around this point. And as you can see, that pending order will be above both the quarterly and the new monthly contract control block. So we will not expect that they will let this happen. So immediately price starts heading in the direction of that pending order, you will see institutions putting in new heavy orders for sell. So since the reprice is to go pick a pending heavy sell from here, and they now move that pending order, instead of using the pending order, they will manually open new heavy order right here to fulfill that pending order. So that means the sell they are supposed to use pending order to enter, they manually enter it right here. And we are going to see that order from the institutional data that we have. The sell started from inside the control block. You can see right here, went down. They came back into the control block to load more positions, and then they continued the sell to the downside. That is how this contract ended. Now to the next monthly contract. Before we go into the next monthly contract, remember that the players here were bullish before, but now they are bearish. So that means we expect them to defend their bearish position whenever price come there, because they won't want their position to go into negative before the end of the contract. So right here we have a new monthly contract. The fundamentals is bullish for this monthly contract, which is telling us that the institutional traders should position for buy inside that control block, and the target will be the high of the previous monthly contract, which is right here. So that is telling us that definitely they are going to push price into the sell quarterly control block which will most likely reject it because there are sellers there and they won't want their position to go into negative. But we don't trade it blindly. We check the orders that come into the market while price is in that zone to confirm that yes, they are putting in heavy sell to defend their position. So right now we got a breakout, bullish breakout in the direction, and we already know this is where they are going for target. That's exactly what happened. The institutions came, delivered the bullish direction for this monthly contract, and after that we expect reprice, and the reprice is coming right from inside the quarterly control block, and that's exactly what happened. And here marks the end of this quarter. So let's go ahead into the next quarter to see how that played. So right here is the new quarter. The fundamental at this point was bearish, which is telling us that the quarterly contract and the monthly contract is bearish, and the target of that sell will be the low of the previous quarter, which is this low right here. Let me mark that. So that's the quarterly target, and the monthly target will be the low of the previous month, which is this low right here, just below the control block. Right here, the quarterly and the monthly institutional traders here positioned themselves for sell, and immediately the contract opening was completed, we had a false move to the upside and the sell started. The best point to enter a trade is above the control block. That is the most premium of the premium, and below the control block is the most discount of the discount. When you know the direction is bearish and you see price go above the control block, that is the best price to enter your sell, and that's exactly the opportunity that was presented here. As you can see, price gave a false move to the upside, and from there they started pushing price down. Price came below the control block right here for the first time, went back into the control block so that they can add more positions. Then we add a drop to fulfill the monthly target. After the monthly target was filled, we got a retracement back to the control block so that they can now load up more position from the profit they made here. And right here we started seeing heavy sell come into the market from our institutional data, and from there we confirmed that yes, they are going to shoot down for the quarterly target, and that's exactly what happened right from the control block. That leads us to the opening of a new monthly contract. For this monthly contract, the fundamental direction was bearish, which means the monthly institutional traders right here should position for sell. But because those institutional traders right here know that the sell target is close and they are going to reach it very soon, they position for buy instead. We saw the orders that came in right here, heavy buys came into the market, confirming to us that yes, these people right here are not positioning for sell, but rather they are positioning for buy, which is repricing for this quarterly move and also for the new monthly contract. So right here is the low, and that happens to be the monthly target right here. And while we were still inside the opening of the new monthly contract, the target was fulfilled by institutions and they started opening buy order. So because we know they are opening buy and that we are expecting repricing, so we expect bullishness, we also position ourselves for buy. And right here we got the fake move to the downside after the contract opening was done, and from there price started going bullish. After they shoot out of the control block, what did they do? They came back into the control block to accumulate more position. After they got to the midpoint of the monthly contract, they came back into the control block, accumulated more buy positions, and from there they shoot up to fulfill the repricing. I think the heavy order they were repricing to was around this point, and they got to that order right here. But before that, a new monthly contract came into play. In the new monthly contract that came in, the fundamental bias was bullish, which means the traders right here should position themselves for buy. So, and the target of that buy will be the high of the previous monthly contract, which is this high. And as you can see, while the contract was being opened, that target was reached. And because we saw the orders that came in inside this region, the institutions were opening heavy buy instead of sell for the reprice. That means they want to still shoot price out of the control block, and that's exactly what happened. Price went out of the control block to fulfill the repricing from this period. Price came inside the quarterly control block where we have bigger sellers than the buyers in this zone. You know, this is a quarterly contract and the people here have more money than the people here. The money invested here is a lot more than the one right here, which means these people will want to defend their position from going into negative before the end of the contract. So they will start loading more sales, and these people here that loaded buy will also want to defend their position so that they don't go into negative before the end of the contract or before they are able to offload themselves or flip their position to sell. That's why we add this range right here. These people here pushed price into the seller zone. The sellers have more money than them, so they started loading up more sell to defend their position, and that's why we got this push back to the downside. Price came back into the control block of the buyers, that's the monthly buyers. They loaded more buy also to try to force the market in their direction, but market came back to these heavy sellers right here, and those ones put in more sales into the market. So with that, the institutional traders in this monthly control block knew that these people had more strength than them, so they also started closing their position using this as their take profits. When price went up, they closed all their positions so that the bigger player can win. It's either they closed it or flipped it, but from the order we saw, we cannot pinpoint which of the players were placing the orders, but what we saw that heavy orders came in around this region for sale and nobody bought around here. That means this push up was just to close their buy positions, therefore eliminating the buyers here, and maybe some of the buyers flipped their position to sell right here to join the quarterly institutional traders. And as you can see, the resulting move passed through the control block with zero resistance. You can see price went through that control block without any resistance. That is to confirm to you that these buyers right here are no longer buying. They've switched to sell inside the quarterly control block where we have bigger sellers. So that is why this control block gave way, and after that happened, you can see that price retraced back to the quarterly control block where we have sellers to accumulate more positions and also give the opportunity to the traders right here to enter sell position, and from there you can see we got a sell move which lasted to the end of the quarterly contract. So let's move forward. For this new quarterly contract, the fundamental bias was bullish. It is still the same quarterly traders right here. After closing their orders here, they will reposition inside this quarterly contract, and that is what we refer to as rollover in futures trading. They roll over their position which was in profit here, they take profit and opened buy, because that is what the fundamentals are saying, which means the institutional traders in this control block will be positioning for buy, and the target will be the high of the previous quarterly contract, which is this high right here. And for the monthly traders inside this control block, their target will be this high, which is the high of the previous monthly contract. Right here we have the control block and the institutional traders there positioned for buy, which means they have buy, and we expect price to shoot up. Immediately the contract opening was done, we got a false move to the downside that went below the control block, and like I said before, the best place to enter a buy is below the control block. From there price started shooting up and went straight for the target. The monthly target was reached here, and at that point we are already in another monthly contract. The fundamental bias for that monthly contract was bullish. This high is the fundamental target for this new monthly contract, and immediately the contract was opened, price went straight up, delivered the target of the previous one and also for the new one that was opened. That means the institutional traders in this block will be positioning for a repricing. But don't forget, the fundamental target for the quarterly contract is yet to be picked. We saw the orders that came in right here. Instead of buy, they were opening sell, which is confirming to us that they are preparing for the reprice. But because we know the fundamental target is yet to be reached, we expected that to happen before the sale will come in. After the contract opening was done, we got the first move straight up to fulfill the quarterly target, and from there the repricing started. And like you already know, that the best place to enter a sell is above the control block. Right there, the sell started, went straight into the control block. The few traders with buys flipped it right here to sell, and then price went out of the control block and headed straight down towards the quarterly control block. And like you already know, that the traders inside this quarterly control block are bullish, so they will definitely defend their position when price get there. On the futures chart, this move to the downside touched the control block, that's the quarterly control block, but here on the forex chart it was not touched. That is why I advise you to always monitor on both futures chart and also the forex chart. So after price touched the control block, we already started seeing heavy buys coming at this point, and it also aligned with the midpoint of the monthly contract where we expected repricing. So right there we started loading for buys, and because we know that the monthly traders right here are bearish, and we expected the monthly sellers inside this control block to come in and defend their position, but with the ease at which price crossed the control block, it means those traders must have taken profit on their trade or flipped their position around this point, and that is why price was able to cross the control block with ease. And after the crossing, we already know that these people are no longer here. That means they have flipped their position for buys, and we expected buy to continue. And what did price do? It came back inside the control block so that those people that are here that are yet to enter can load up their buy position. And at this point we got heavy buys from our institutional data, and from there price started heading up. So if you are still with me at this point, please go ahead and like the video. Don't forget to subscribe to the channel if you are new, so that you don't miss out when we post new videos. So right here, a new monthly contract was opened and the fundamental direction was bullish, which means the high of this monthly contract is the target for that new monthly contract, which is very close. The monthly fundamental target was reached while the contract was being opened, as you can see, which means the next move should be a reprice to activate pending orders from the previous half of this monthly contract. But the order opened inside here was bullish, which means the institutions wanted to push price out of the control block. Instead of positioning for sell, they positioned for buy. So they pushed price out, and at this high we started seeing heavy sell order come in. But because they opened buy here, which means they are positioned for buy, we expect them to defend their position. And when price came back into the control block for the sell, they opened buy again to defend their position, and that is why price was not able to cross that control block. Because of the heavy orders that came in right here, price started shooting back up. That's these buyers right here were defending their position. Price started going up, it failed and started coming back into the control block and remained inside the control block for the rest of the monthly contract. And that led us to the end of the quarterly contract. For the new quarterly contract, the fundamental direction was bullish, which means the target is the high of the previous quarterly contract, which is this high right here. Let me go ahead and mark that. The high also doubles as the target for the monthly. So inside there, we expected the institutional traders that are opening quarterly contracts to position for buy, but instead of buying, they were selling. According to the institutional orders that came into the market, we saw that they were selling, which means they are positioning for sell, and that's because the target for the buy is near. Price went straight for that target right here, came back into the control block, rejected a little bit before dropping and crossing that control block. After breaking the control block, you can see the price retested that control block right here so that they can add positions, and maybe for the buyers that are still in the control block to flip their position, and from there the sale started. This is the open of a new monthly contract, and the fundamental direction for that monthly contract was bullish. So we expected the institutional traders opening their monthly contract right here to position for buy, but to our surprise we started seeing heavy sell come into the market, which means they are positioning for sell. So we got a breakout to the downside, confirming to us that yes, these people are actually positioned for sell. Price continued down. Around this point is where we got heavy buy to confirm to us that yes, price wants to reverse and start heading back up. Price headed back up and went straight into the control block, as you can see. And when price got into the control block, we already know that the players right here are bearish, and also the quarterly players right here are bearish. That means we have bearish quarterly players and bearish monthly players. There's nothing that is going to push price beyond this control block. There are no buyers. There is no new contract where buyers are coming in to counter these people here, which means this is just a retracement. And when price got inside the control block, we started seeing heavy sell order come into the market by the players here defending their position, and from there price continued downward, which led us to the end of that monthly contract and the beginning of the next one. The fundamental direction for this new monthly contract was bearish, which means we expect the traders inside this block to position themselves for sell, but the target for that sell was quite close, which is this low right here. Price broke out downward to deliver the sell, and after the fundamental target was fulfilled, we expected a reprice to heavy pending orders from the previous half of the previous contract, and that's what happened here. We started seeing buy order coming and price started going up. But remember that the institutional traders inside this control block are bearish. Likewise, the quarterly traders too, they are all bearish, which means they are definitely going to defend their position right here. And that's exactly what happened. When price came in here around this point, we started seeing heavy sell come back into the market to confirm to us that yes, they are defending their positions. They don't want it to go into negative before the end of that monthly contract. So we expected price to start heading down. That's exactly what happened. It head down, came back into the control block, gave us a premium right here, and then rejected it and continued downwards. That led us to the end of the quarterly contract also, and a new quarterly contract, which is the current quarter we are in, was opened. The fundamental direction for this new quarter was bearish, which means the low of the previous quarter will be the fundamental target. So that means this low is the target. With the target being this low and the buyers being bearish, we expected the institutional traders opening this quarterly contract to position for sell, and that's exactly what they did. We got a breakout to the downside and price headed towards the target. The target was reached right here. After the target was reached, we expected a reprice to the pending order from the previous half, and that's exactly what happened. At this high, we got a new heavy sell order, which confirmed to us that yes, they are defending their position and they don't want price to come inside the control block. So at this point was where we started selling again, and price continued to the downside. That led us to the end of the first monthly contract in the quarter, and right now we are in the second monthly contract in the quarter. The fundamental direction for this monthly contract was bearish. The target for the sell is this low right here, which happened to be the low of the previous monthly contract. The target was reached while the contract was being opened. After the target has been reached, we expect a reprice to the pending heavy order from the previous half, which happened to be the pending heavy sell at this high. That's what we expect price to activate. They are yet to do that. So that is where the market stand as at now. So what I'm expecting right now is this to be a retracement. Maybe they can push price to retest the control block and accumulate more position and push price up. What I am certain of is that price cannot just cross this control block right here because it is a quarterly control block and the players inside the block are sellers and they have more money than the players in this control block. So right now I expect price to shoot up and maybe they can push price down a little bit more to enter the control block. They may not do that, but we'll see confirmation for the buy and price will go up, fulfill the target and most likely get to the control block, and we will see the sellers inside this quarterly control block coming. They'll put in sell orders and price can from there start pushing back down. If these people still have more money to defend themselves, they will definitely defend themselves and try to push price back up. But at the end of the day, the players in the quarterly block have more money than the players in the monthly block. So these are the players that will most likely lose and price will just break through it, retest it and continue to the downside. That is if all of this happen before we get to the end of the monthly contract. I believe I've been able to explain what the control blocks are and how to apply it to your trading. This video is not going to be on YouTube for so long. I'm going to make it private. I'll just leave it on YouTube for 2 weeks and only members of my Telegram group will be able to watch the video. So I wish you all the best in your trading. Don't forget to like the video, leave your questions in the comment section, and if you are here to subscribe to the channel, hit the subscribe button. I'll see you guys on the next one. Have a good day and all the best in your trading.